Alright everyone, welcome back to the channel for another quick news update. So, the European Central Bank, also known as the ECB, has just made their largest ever interest rate hike in recorded history for the Eurozone. While this was happening, I was listening to the most recent ECB press conference live with ECB head chief Christine Lagarde, followed up by the chairman of the Federal Reserve, Jerome Powell, and I'm going to let you know everything you need to know, the key takeaways, and how this is going to affect the market in a couple of minutes or less. So let's dive right into this. So like we said at the start of this video, the main news story here is that the ECB has made the largest ever interest rate hike in recorded history for the Eurozone. This has happened because they've raised the interest rates by 75 basis points to tame runaway inflation, almost like a copycat of what's been happening in the US recently. Now, the ECB specifically lifted its deposit rate to 0.75% from 0 and raised the main refinancing rate to 1.25%, their highest level since 2011. This was definitely needed considering the Eurozone inflation rate is currently running up to 9.1%. Now, I'm going to let you know the major takeaways of what the ECB chief said today. Obviously, we know that they've raised the three key ECB interest rates by 75 basis points. Christine Lagarde also stated in future meetings they'll be looking to raise interest rates to diminish demand and stamp down on the upward sloping inflation. Their current target for midterm inflation is 2%, which seems like a long stretch considering we're currently residing at 9.1%. They also said at the end of this year, end of 2022, they expect inflation to average around 8% in the Eurozone, 2023 round about 5%, and down to their midterm inflation goal of 2.3% in 2024. They also said the Eurozone economy is likely to stagnate into the first quarter of 2023 as the euro extends losses against the US dollar. You can see for the first time in a very, very long time, the euro is down to 99 cents against the dollar. So definitely not looking good. If we zoom out, you can see this is really the lowest the euro has been against the dollar since 2002. Additionally, the Great British Pound is also dropping against the US dollar. We are tumbling today after this new news has come out from the Eurozone. As you can see, the GBP USD pair is down 0.25% today, and the Euro USD pair is down 0.37% today. But as you can see, looking at the Great British Pound, we are back to the levels that we've been valued at in March of 2020, and if the Great British Pound does continue extending losses against the dollar for another couple of weeks or so, then we're going to be back at 1985 levels. So Great British Pound is definitely not good. While we are on the subject of the Great British Pound, they have also followed suit with the ECB and raised their interest rates to their new official bank rate of 1.75%. This wasn't a 75 basis point increase, this was a 50 basis point increase from their previous level of 1.25%. Now, scrolling down further, we can also see this is the largest interest rate hike we've had in a singular month since 1989. So, we just talked about the main takeaways from the ECB. Let's now talk about briefly what Jerome Powell said and then how these will affect the markets. Well, Powell didn't say too much like he normally doesn't. He basically said what we already know. Very much my view that we need to act forthrightly, strongly on inflation. Powell need to keep going until we get the job done. So he basically just said, you know, we're still looking at inflation. Interest rate hikes are likely to be coming in the next month. If we do look at the Fed swaps rate, it is showing an 85% probability of another 75 basis point increase in September. Once again, if you need a refresher, the next FOMC meeting is 13 days away. And actually over on the Chicago Mercantile Exchange, they're similarly predicting about an 86% likelihood of this 75 basis point increase. So I'm definitely looking at that. So we talked about what the ECB head said, and now we've talked about what the head of the Federal Reserve has said. Let's talk about how this is likely to affect the market. So keeping it pretty simple, this is very bearish for the markets. We all know the effect of rising interest rates on the economy. So with Eurozone inflation going through the roof right now, and obviously them having to now raise the interest rates very high, this is obviously leaking out into the Fed swaps, which is now showing an 85 to 86% probability of a 75 basis point increase. How has this fared well previously for Bitcoin in the stock market? Well, we can look at this. We've got the Bitcoin chart right here, and if we overlay this orange line graph of the stock market, we can get a fairly good idea of what happens every single time we have these FOMC meetings with a 75 or 50 basis point increase. Here you can see interest rate hike, we pump into it and break down, interest rate hike, pump into it, break down, interest rate hike, pump into it, break down, interest rate hike, pump, break down. What do you think we're going to do with this upcoming FOMC? I think it's pretty obvious, which is why we don't really need to do a deep dive into the TA. We're probably going to bleed into this, pump after it, and then break down into new lows. With that being said, how is this news likely to affect the economy as a whole? Well, the euro, expect the euro to continue moving down against the dollar, expect the Great British Pound to continue to move down against the dollar, and this will definitely dampen on the SPX. Now, I'm definitely not saying that the euro has to be bullish for the SPX to be bullish. It's pretty well documented. If you look right here, you can see the euro was topping out very, very hard while the stock market was continuing to move up. But the stock market did soon top out after the euro continued to massively get obliterated against the dollar. And really, this is because the stock market likes it for the global economy to be healthy. The SPX would like the Asia markets to be healthy. It would like for the Eurozone to be healthy. It would like for the US to be healthy. It would obviously prefer if the US is the strongest, looking at things like the SPX, the S&P 500, but nonetheless, it does definitely leave a dampen on the traditional markets when the Eurozone economy is going through the toilet, Asia economy is going through the toilet, US economy is also going through the toilet, but it's still got the lid on, and it's still just about holding in there. So I expect continuation to the downside for oil. I don't expect this to have a major impact on the SPX price right now. As you can see, they're pretty highly correlated since 2020. I expect Eurozone consumer confidence to continue to fall through the floors, and the DXY to continue pushing up. So with all that being said, all of this news, all of what I've just said is very bearish for Bitcoin. Expect continuation with the US 10-year yields. Expect continuation with the Euro 10-year government yield. So that's all I've got for you today, my friends. Very bearish news for the markets. But yeah, if you want to follow me over on Twitter, it's here at 618cowboy. That's all I've got for you for this video. Cowboy out. Peace.